Ladies and gentlemen, welcome back to the channel. Tesla stock today was up about 1.3%. Now, tomorrow we're actually going to have a massive catalyst, okay? And let me just give you the scoop here. Jerome Powell is going to be speaking. Now, the FOMC minutes today, most Fed officials said that they are in favor of reducing rates further into the end of this year, and the markets are solidly pricing in a rate cut in October and a rate cut in December. If Jerome Powell confirms that, things can get a little bit explosive for a stock like Tesla tomorrow. And this could really help set up a larger end of the year rally for markets and for Tesla. Now, here in this video, we're also going to take a look at final option activity numbers today on Tesla stock. And we do have two clips today on CNBC where they specifically are talking about Tesla. So I want to share those with you as well. Ladies and gentlemen, the work is cut out for us here in today's episode. Hit that like button as well as subscribe to the channel. If you have not done so already, it's free 99, cost you absolutely nothing to do so, and helps push these videos out to even more people that need to hear this. Now, if you guys want to take it a step further and come trade with us in the trading community, where we are going out and finding under the radar opportunities in AI, energy, robotics, gene editing, minerals, biopharmas, quantum, okay, some of the main themes over the next decade or so, and investing in the quality companies early. Come join us. Check that link out down below in the description of today's episode. The trading community portfolio is up 115% year to date. I think that's going to get even crazier into the end of this year. Again, I'm not a financial advisor. I am not a financial planner. Come to your own conclusions. Don't be a jackass. Take responsibility for the stocks that you invest in, quite obviously. But nonetheless, an option activity today for Tesla. Final numbers here. You have 143 different trades totaling $435 million with a positive order value of 42%. This is the first more negative day than positive day in a very long time. I can't recall the last really, day where there was more negative option activity than positive activity in Tesla stock. That's pretty unusual. If you look at the past week, you've seen 2,179 different trades totaling $3.47 billion with a positive order value of 82%. So today was definitely on the weaker side. Now, does it mean anything? No. Is it something you should give a lot of weight to? No. Sometimes you do have bad days. One really large trade to hedge a really large position could skew everything, okay? But just take it into consideration heading into tomorrow when we do get a speech from FED Jerome Powell, and we'll talk about that more in just a moment. Short interest of free float sitting at about 3%, 85.6 million shares that are currently sold short. Today, you had 69.5 million for volume. That was total volume numbers. So you can see how, if we start to get a rally, if Jerome Powell gives us good news, if we get robotaxi expanding into another city at any point, 20 million shares get covered, let's say, that is a substantial amount of buying pressure. At least for a couple of days, you could see a lot of buying pressure. Are we going to get a month-long short squeeze because of this? No, but you could have a pretty explosive couple of days on, the next big catalyst. Now, again, today we did have Stifel that raised their Tesla price target to $483 per share from $440 per share, citing increased confidence in the company's FSD software and its expanding robotaxi program. With the release of FSD V14, Stifel views it as more likely that Tesla will reach unsupervised FSD in the medium term. And the other substantial piece of news today was from Wedbush. They say that Tesla's cheaper models are key to 500,000 delivery goal. Wedbush said that Tesla's new lower cost Tesla Model 3 at $37,000 and Tesla's Model Y at $40,000 are a first step towards regaining a 500,000 quarterly delivery run rate. The firm sees the move as critical ahead of the EV tax credit's expiration, but was underwhelmed by the modest 5% $5,000 price cut. Now, here you can see on Trading Economics calendar, tomorrow morning at 8:30 in the morning, you're going to have a speech from Fed Jerome Powell in which, I definitely think we're going to get a bullish Powell, right? The risk in not getting economic data is that the economy is weakening right now. The risk is not that inflation is skyrocketing, okay? That is generally not the risk. So I think that does create a bias to cut. And I think Powell is going to stand behind that they would rather cut like they were already planning on. And the government being shut down just raises odds that they're going to cut. Now, is Powell going to say that? No, right? Because he doesn't want to be, holding up the government from reopening by, basically saying he's going to cut rates more if the government is shut down. But I think you are going to get a Powell that is bullish, that says a lot of the same old that we heard at the last Fed meeting, that the economy is doing okay. There's weakness in some areas. There's weakness in the labor market, that they just think it's appropriate to cut rates because the labor market, supporting that is, a better idea than keeping rates higher to fight lingering inflation, right? You're going to hear a lot of the same old that you heard previously from Powell. But what markets are going to hear tomorrow is, wow, the Fed's still planning on cutting rates. That's great for stocks, for AI, for small caps, right? So I do expect that tomorrow you are going to see a rally based on Powell's speech. Now, how much of that is priced in at this point, I don't know. We did have quite a red day today. The S&P was up 0.6%, NASDAQ was up over 1%, Russell was up over 1%. So there's definitely some people that were positioning today for Jerome Powell's speech tomorrow. But I still think it's a catalyst that could be very positive. Now, assuming the government does not open, we will not be getting initial jobless claims that are scheduled to be coming out tomorrow. And then on Friday, we will be getting the Michigan Consumer Sentiment Survey. What a lot of people are going to focus on are the subcomponents here, not just the headline. 5-year inflation expectations are expected to fall. Consumer expectations are expected to roughly hold steady. Current conditions are expected to fall a little bit, and 1 year ahead inflation expectations are expected to fall a little bit as well. Does that give the markets a reaction? It could. It just depends on what Powell says. What Powell says tomorrow could power the markets into Friday. Like, that would not shock me if Powell does take a, dovish approach. Now, what does that mean for Tesla stock? Well, it's hard to say what just one speech from Powell could do for Tesla, but it could definitely send us into the higher range here. Again, remember that you hit a high of about $471 per share right before deliveries came out. While deliveries came in much better than expected, you had a, buy the rumor, sell the news event. Could you get back into the 470, potentially 480 range if, Powell's speech is good over the next 48 hours? That's definitely a possibility. Even the stock being up, over 1% today is good to see. It does show that people don't really care about the vehicle side of Tesla nearly as much as they did before. It's about robotaxis. It's about FSD. But I do think Powell's speech is going to be good tomorrow, and that is going to fuel another move higher for Tesla. Because really, Wall Street just wants to hear we're going to be getting rate cuts and the economy is going to avoid a recession. If that's the narrative that Powell spreads, stocks are going to do well on that with rate cuts and no recession. And I think that's the gist of what we're going to get from Powell tomorrow. Now, I want to share this clip with you from CNBC today. It says William Blair's Dorheimer says that Tesla stock is more aligned with robotaxis and FSD than new models.
Lines with that new cheaper version of its Model Y and Model 3, but will they help give sales and deliveries a boost after the federal EV tax credit did expire at the end of September? Joining us with his thoughts this morning, William Blair Group Head of Energy and Power Tech, Jed Dorsheimer, has a market perform rating on the stock. Jed, good to see you again. Thanks for joining us.
Hey, thanks for having me back.
What'd you make of these new models?
Yeah, I mean, listen, it's definitely going in the right direction. You get about 3/4 or 2/3 of the of what you lost with the tax credit in terms of this cheaper version. So it's definitely going to be a demand filler. But I still think the core auto business is facing a lot of headwinds, and from a stock perspective, probably doesn't matter all that much right now. Is clearly the valuation is more aligned with robotaxi, and you also did get the version 14 that was released yesterday too.
I wonder, do you see them sort of basically doing the minimum to keep consumer interest in autos, in deliveries sustained, but not so much that it's a drain on capital because they have so many higher priorities?
Yeah, I mean, I think that you're seeing this telegraphed by Elon with the lack of a Model 2. If you go back a year or a year and a half ago, were they going to announce this new hyper competitive, fast hatchback, probably to address the European market and kind of as well as the North American markets, and they pivoted away towards robo. And I think you're seeing that telegraph from a capital efficiency perspective here, and the stock is following suit. What do I mean by that? Well, if we look at the value that's being ascribed to the shares, auto is the least valuable, even though it makes up the most revenue. And clearly these new models are going to be dilutive from a margin perspective. So as long as investors are still focused on robo and autonomy, coming out with these new versions of FSD are probably the more material driver from a stock perspective.
But just on the cheaper model, so 39,000, almost 37,000. So is that going to do the trick? Is that going to convince people to buy electric? Because it does feel like the market's been clamoring for a cheaper option.
Yeah, but think of it this way. You just had $7,500 tax credit that everybody knew about in North America. And so if you were in the market and even thinking about in October, November of buying a car, like a vacuum, you pulled that forward. And you saw that, right? We just got 497,000 units delivered last quarter, which is a record. But that's going to leave a gap this quarter. And I think it's unlikely that, getting $5,000 off versus where you just had $7,500 off, probably unlikely to fill that. So we are expecting a 19% drop in terms of units next quarter. And I think margins are going to contract. And remember, you also have the regulatory tax credit that goes away. So a lot of people conflate that with the EV tax credit. The two are different. And so that's pure margin that's now going away, at least in the U.S.
And what, I don't know if you've looked at all the specs, but what are they sacrificing to get to that lower price point versus, a higher priced Y? And is there risk there, shaving some of the luxury touches off, for instance?
It's definitely, they're cutting a few corners in terms of, taking some of the benefits off, but I don't think you're seeing it's a radically different vehicle. So I think, that same buyer, I think this will probably do enough to appease. So I don't see that as the major issue. I just think in the core auto business, you're going into a tougher headwind. Now, should also point out one of the areas that doesn't get much attention, which was also a blowout, or significantly record, was the energy business. And that continues to steadily plod along. That's an area that we're focused on and very bullish on, which was 12 gigawatt hours. And while it's only 15% of revenue, it's 25% of the profitability. We do think that can probably fill that gap a bit more as they march towards autonomy.
You're definitely right about the overall guidance in autos, given what BMW said today and Mercedes yesterday and Porsche last week, Jed. But Tesla's a slightly different animal. It's good to get your take again. Talk soon.
I also want to play this clip for you as well. It says AI stocks will rise a lot as the Fed cuts rates, says Dan Niles. Now, Tesla is one of those AI stocks now. And before Powell's speech tomorrow, this could be valuable to hear.
Niles, founder and portfolio manager at Niles Investment Management. Dan, it's great to have you on the show. Welcome.
Thank you.
We'll start right there. What do you think of this?
Well, you have to separate it into pieces. So if you're asking, what do I think about the stocks of the AI companies? I think they're going to go up a lot for one simple reason. The Fed's cutting rates after being on hold for 9 months. You're going to get another probably 3 cuts between now and January. And then you're probably going to get Stephen Myron being the new head of the Federal Reserve in May, and he wants rates about 1.5% lower than everybody else. So in an environment of easy money, you're going to be able to fund a lot of cash burning businesses and have everybody be treated like everyone's going to win. So from a stock perspective, that's how I'm thinking about it. Now, if you want to look out several years from now, or maybe at the end of 2026 when rate cuts are done, and you go, all right, are people going to get more discerning about these circular investments? And are you going to figure out, well, which AI companies are actually going to win versus the ones that are going to be sort of left behind? Then I think you're going to start to see some problems. But in the near term, I think these stocks go up for one simple reason. Easy money funds a lot of cash burning AI businesses.
I just got to take a little divergence here because you just mentioned Steve Myron as the possible next Fed chair. Why do you think that? I think just today he batted down rumors that he was even considering it or in conversations about it.
Well, I mean, let me put you this way. There's a reason he's out. If you look at the Fed dot plots, he wanted 125 more basis points of cuts between now and the end of the year. So that would mean one cut of 75, one cut of 50. President Trump, as we all know, gets to appoint the new Fed chair. And as last I saw, Myron was still part of the White House administration while he's on the Fed at the same time, which has not happened in a very long time, right? Usually you resign your prior post. So we'll see how this works out. But I think it's pretty clear that the Fed, much like in 2021, where I thought they should have been raising rates, they convinced themselves inflation was transitory. They kept rates on hold, and the S&P finished the year up 27%. And so I think right now, the Fed wants to cut regardless of what inflation being above target for 4 years. And the White House wants rates down. Whoever gets appointed, let's say it's not Myron, it's somebody else. It's going to be somebody that wants to really cut rates a lot. So easy money drives everything up. And that includes stocks, Bitcoin, gold, wine, art, you name it, just like it did in 2021. And that's what's going to happen again. And in that environment, every company is treated like a winner because every company can get capital.
If I go back to AI here, is it still AI infrastructure stocks where you should be putting your money to work here right now, especially as I would argue quite a few CEOs in corporate America are saying both publicly and privately that at least for now, at this moment in time, the rhetoric and the reality in terms of the capabilities of AI are diverging?
Oh, they completely are diverging. But again, that's two separate questions, right? Because if you think about it, you go, okay, you've invested between the 5 biggest spenders out there. So Google, Amazon, Microsoft, the 3 hyperscalers, you throw in Meta and Oracle. Over the past 3 calendar years, including this one, you will have spent $800 billion from just those 5 guys in CapEx. The industry at total will be about $1.2 trillion. OpenAI this year is expected to produce $13 billion in revenues. The entire AI native, so companies that don't have other businesses like Microsoft, Google, Amazon, etc., just the AI native companies like OpenAI, Anthropic, Perplexity, etc., in total are going to generate about $20 billion in revenues this year, with $13 billion out of OpenAI. That's against $800 billion in investments. So at a certain point, yes, you're investing all of this, but somebody has to be willing to pay for all of this infrastructure. And in the near term, nobody cares because stocks are going up, right? So everybody's going to win. But are you going to get a massive shakeout at some point when the easy money stops? I think the answer is absolutely yes. At this point, my brain is on thinking that this is kind of like 98, 99, where, you have easy money through whoever the next Fed chair is. Could markets be up 20% this year and up even more next year to start? Sure. And then could you have much more discernment and then a massive meltdown after that? Sure. But in the near term, you want to stay positive because, you go back to the late 90s, right? 1998, NASDAQ was up 40%. 1999, NASDAQ was up 86%. And then the first part of 2000, the first 2 months and change, it was up 24% to start. And then, of course, we know what happened. But it was a 6-year build, to get to that. 6-year build to get to that point from when you had the introduction of the first mass internet browser, Netscape Navigator, at the end of 94. Okay. So you got to that peak in 2000.
So yeah, basically what he says is you should probably be long AI stocks, long this market, until the end of rate cuts, which could be at some point next year, which generally I think I agree with that. Although, hopefully by the end of next year, the stocks you're buying today really help to justify a lot of the valuations where they are. There's some stocks out there that are crazy expensive. There's stocks out there that are trading at bargains in the AI field, right? Not everything is crazy right now, and you really want to buy the ones that are not crazy right now. Now, Tesla's valuation, believe it or not, is not crazy right now comparable to other stocks. And again, as we get into next year, as Optimus really progresses and Robotaxi expands, Tesla could be one of the safest, quote-unquote, AI stocks out there. Now, I'm not a financial advisor. I'm not a financial planner. Obviously, come to your own conclusions. But those are my thoughts as of now. Again, I do think tomorrow could be a big day with Jerome Powell. So let me know your thoughts on this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day. And check out that link down below in the description of today's episode if you want to come join the trading community. Have a great rest of your day, and I will see you in the next one.